Now, whether it's lending them money, whether it's letting them bounce money back and forth, whether it's hedging in and out banks, going through different loopholes, banks have helped short sellers over the past couple of years and basically have been saving their ass. But we have come down to a point where that might not be the case anymore. Yesterday we talked about small banks collapsing, potentially leading to big banks collapsing, causing a major domino effect, making it much worse for short sellers and potentially the overall market as a whole. Now, fueling concerns about a potential CRE crisis involves a Brookfield Corp fund defaulting on $161.4 million mortgage for 12 office buildings in Washington, D.C. On top of that, U.S. stocks decline after mixed earnings from Goldman Sachs and Bank of America. Yes, Bank of America beat earnings per share, coming out at 97 cents, estimated at 81, and they also beat revenue, coming out at $26.3 billion, estimated at $25.3 billion. However, are these numbers accurate? It seems as if major banks are spoofing numbers to make it seem like they are in a better position than they actually are. We have also seen that what wasn't reported coming up to this earnings since the time being, billions of withdrawals have been coming out of Bank of America. And Goldman Sachs actually lost on earnings per share, coming out at $8.79, estimated at $8.24, and lost on revenue, coming out at $12.22 billion, estimated at 12.83. On top of that, JP Morgan Chase's deposits declined by 57 times that of Citigroup over the past 12 months, and Citibank is not okay either. How is Citi shoring up its balance sheet? Incentives, offering up to $2,000 in cashback bonuses for deposits made within 20 days of opening an account and keeping it there for 60 days. Basically, many of these large banks are creating incentives for you to deposit money and hold money in there, holding through this crisis to basically save their ass, and Citibank is one of those banks, as well as Capital One and many others. Now, banks are witnessing the deepest year-over-year deposit contraction ever seen. Take a look at this chart, as nobody is depositing in banks anymore, thus making it important for banks to create this incentive for you to deposit into their bank. You guys let me know in the comments if you are keeping your money in the bank and if you continuously deposit your money into banks. Now, what could go wrong? Who else is joining the banking sector? Apple. Apple announced a savings account paying 4.15% per year. Meanwhile, the average savings account pays just 0.35% per year. Apple entering banking is just the next part of the banking crisis. Technology and the banking crisis have people questioning the system. I'm not going to go throughout the thread, but you can just imagine what could possibly go wrong with Apple joining the banking sector. Moving on, a Japanese insurer with $65 billion of assets plans to offload all its currency hedged foreign debt holdings. Seems like something big is going to happen. The same man, in quotes, says it may be a different situation if we can expect hedging costs to fall in the near term. While a US rate reduction will bring down the costs, a cut is unlikely this fiscal year, even though the Fed's tightening will probably end very soon. Coinbase says they are considering leaving the US if regulatory clarity doesn't merge. Speaking of that, I will be uploading a later video on a few of the things that they asked Gary Gensler and how they basically pressed him.
How would you categorize Ether then?
I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you, sitting in your chair now, to make an assessment under the laws as exist. Is Ether a commodity or a security?
Now, we have been seeing these articles, but another economist says XRP is on the verge of taking off in a big way, and other articles are coming out stating that AMC is on the verge of a major short squeeze due to high borrow fees. Articles basically stating XRP is going to explode and AMC is going to explode is a very, very weird conflict of interest if you notice what we have been tracking on the channel. Touching on that, AMC has been on the threshold securities list for 4 consecutive days now. I'm not going to hold it to it because we were on it for about 38 days and then randomly got taken off after Adam Aaron made one phone call. As for AMC Ortex numbers, we're sitting at 26.26% short interest. Utilization is maxed out. Shares on loan at 190.87 million, and the cost to borrow sitting at 343 for an average, 372% for a max, and the minimum at negative 1.24%. So again, negative just means that they are actually getting paid to borrow shares against the stock, and in my opinion, this is just an effort to drag down the cost to borrow average and the max. In my opinion, the average and the max is probably much higher than is actually reported due to the minimum dragging it down. As for APE, 5.75% short interest, 31 million shares on loan, utilization at 67%, so the numbers aren't too hot, and the cost to borrow finally being reported again by Ortex at 9.64% for an average and 11.38% for a max for APE. Now, I wanted to touch on this real quick before we get into the charts. Bed Bath & Beyond had a little bit of a pop yesterday. We're not going to go over the charts because I don't want to waste your time, but take a look at what is happening. It's weird. weird. The call to put ratio. We know that they have been keeping Bed Bath & Beyond pinned and they're trying to sink it into the ground as fast as possible. But is this an effort to do it as fast as possible to avoid any regulatory actions being taken on these institutions doing so? Because Taco Tracker is reporting no calls in the money and no puts out of the money, meaning all of the pressure would be towards sellers, and basically there would be 100% selling pressure and 0% buying pressure through the options chain. On top of that, just that little pop yesterday gave us 2.32 million short exempts on Bed Bath & Beyond. 2 days prior, we were sitting at 3.2 million. They are pinning this thing down as hard as possible. You guys let me know if you have a position in ticker symbol BBBY. Moving on, the SPY is trading at 413.68. Currently, as I'm making this video, came back out, it retested 415, and it got essentially a little bit of a rejection. In my opinion, towards the end of the week, we are going to have a slightly red week. I'm watching for the SPY to retrace down to 408 to 408.50. Essentially, I think the SPY has to retrace back down to 408.50 before either breaking that high at 415 or breaking below to the downside. This is my outlook. If I'm wrong, I will fix it in the coming videos. But overall, I don't want to waste your time on the charts. I kind of came out and basically stated, okay, I'm going to put this here so that I know exactly what I'm expecting going forward, and for the rest of the week, I expect a sell-off. As for AMC, currently trading at $5.07, down 2.5% on the day, and we're getting that retracement that I talked about recently on the channel. In my opinion, towards the end of the week, the AMC is going to come down and retrace back down to about $4.50. Whether it breaks lower after that or starts to scale up into that next cycle is beyond me, but I think we will have a relatively red week for the SPY, for AMC, and for GameStop. However, I think if any of them have potential to make a pop, it is GameStop. GameStop is currently sitting at $22.18, down 0.5% on the day. We broke below that $22.30 level. We came back up, tested it, and got rejected, which is not necessarily a good thing to see, seeing we broke out base and we couldn't break that next high on GameStop. So now it looks like sellers are getting ready to push this thing down. In my opinion, coming up to AMC earnings, I think GameStop will have that gap fill right before earnings, right around May 4th to May 5th. I think GameStop is going to retrace back down to about $18.35 all the way up to that date. That is my short-term outlook. Now, guys, before you click off the video, make sure to get up to 15 free stocks for literally doing nothing. Just sign up for Moomoo using my link and make a deposit. It can literally be a penny from your bank. Go find a penny in your room and put it into your Moomoo account to start earning free stocks. Also, guys, join the Discord. The link is under the video. We talk stocks all day long, post losses, post gains, take some degen bets, and also get access to options trading alerts. Overall, guys, hopefully you enjoyed watching the video or found value out of the video. You let me know your take on these major banks, the dominoes that are collapsing, and make sure to tune in for tonight's video on Gary Gensler. I love you all. Lottery Stocks out.